How's it going, guys? This is CryptoBud here for today. In this video, I'm going to do one of my signature videos for a premier product that I am going all in on, which is going to be Ontology. Yes, you guys heard it right. Now, this video is from my own research. This is not sponsored in any way. This is pretty much going to be, although I am wearing an Ontology hat, it's because I got that at the Neo DevCon for free. They were handing them out. And so I wanted to share this premier project with all of you. And I do feel that this project is going to be one of the best projects in 2018. Now, you've heard it here first that in 2017, I chose Neo as one of the premier coins that was going to outperform Bitcoin, Ethereum, and all the top tier. And guess what? It did. Now, what I'm going to show you guys is your second chance if you missed the Neo run, where Ontology is going to be in. Now, full disclaimer, I own boatloads of this stuff. In fact, I'm still buying, and I will continue to buy as Ontology did do an airdrop for all Neo token holders a while back, and also Ontology has come off onto the exchanges as well. So again, this is my own research, this is my own opinion, this is not financial advice, but I'm going to lay this one out as my signature gold series Ontology reviews. All right, so stick with me because I got a lot of things to talk to you about in the next couple of minutes. Ontology, my personal tag for this one would be the platform of all platforms. Now, I spoke at the Neo DevCon conference in San Francisco last month with the founder, and we did a full interview. If you check on my website, I went ahead and did that one as part of my coverage for all the Neo ecosystem. And as you guys already know, I have been a huge Neo fan from the get-go, and I continue to provide coverage for the entire blockchain because, as you already know, it's one of the best blockchains out there right now. I put my money on it. I've put my entire life savings on it. In fact, I've pretty much gone all in on many different cases. And I continue to believe in both the ecosystem and also in the projects that it's based on. So, sorry, this is a Neo. Actually, I'm not going to apologize. This is a Neo channel on many different levels. All right. So, I'm excited. So, here we go. As requested. Let's talk a little bit about what, first of all, before I get into the details, because the white paper is 36 pages long. They have about 3 of those white papers. They have a technical one. They have a very, introductory one. And they also have one where it's dealing with just a more general overview. So I suggest you go ahead and do your own research and check it out. So before we start into the technical parts, because that's going to take a while, let me go ahead and talk about the first concept of what Ontology is trying to do. Ontology is trying to do what we call trust. As you already know, trust is the only currency that matters in this world. Now, you are listening to me because you trust me that I'm going to give you good and fair advice. Well, not advice, I'm sorry. Education and information. You trust that your friends are not going to backstab you. You trust your family members that are going to provide with you. You trust that your job is going to give you money at the end. So trust is really what creates this whole essence of cryptocurrencies and why cryptocurrencies first started. We give trust that every day we wake up 9 to 5 and we work for some money that says in God we trust. Trust, ladies and gentlemen, is the ultimate currency of human existence. And what Ontology is trying to do here is trying to understand and try to digitize that trust in many different forms. So it says here that trust is a component in human organization and social collaboration. Every single time we collaborate with other people, we trust that they're going to do the work they do. We trust that things are going to get done when they get done. And trust has been a requirement of all social and economic partnerships that's been built up through tech, law, and community throughout history. Now this, I don't have to explain to you how important this is. Money is actually secondary to trust. Bitcoin really started because there was a lack of trust in the financial system, specifically in the fiat world. And because of that, that trust was broken. And as a result, the birth of cryptocurrencies. So Ontology is really hitting home to the core problem that we have right now in our system, which is going to be the trust that we have in our government, the trust we have in our community, and the trust we have with each other. If you can provide technology on some level with this, you would have solved one of the biggest problems we have right now in the current century. Let's talk a little bit about what the barriers to trust are first. So what Ontology is trying to do here is create a platform that's going to create an trustless ecosystem on many different levels. Now, when I say trustless, we need to kind of emphasize what trust really comes down to. So one of the barriers to trust and how to solve this problem really boils down to a couple of things. Number one, there's a lot of fragmentation of trust, meaning that data always has to be verified at multiple junctures. Now, let me give you an example. The other day I was going in and logging into, let's say, my bank account, right? There's always got to be a login credential. You have to trust servers on the back end. You have to trust that the accounts are being brought up. Even with technology, there are multiple steps for verification. And unfortunately, those steps can easily be corrupted. And what Ontology is trying to do is try to figure out how we can make this a little better. Also, the second part is the missing role of the individual. We trust that our organizations are going to handle both our livelihood, our money, our community, our property, and our assets specifically. And normally we don't have a say in that data. An example, the privacy breaches that we've had so far with Facebook. Great example of how we don't have a say in our own data. The second one is because that trust is fragmented, the cost of verification has definitely increased. We actually have companies right now who are trying to verify that trust specifically, and their main job is to pretty much verify that that information is correct. Computer systems are built around there. Companies have to build IT infrastructures just to maintain that trust and verification. So although we are definitely digitizing a lot of our assets and we're digitizing a lot of our intellectual property, we actually have to expend a lot of money in just trying to verify that trust. There's also a monopolization of data management. For example, most systems right now have points of failure across systems. Give an example like Google. Google is a centralized system that aggregates data across all different platforms, and it has a monopoly on all the user data. That's a huge problem because it goes against this idea of being able to trust multiple sources of information. The fragmentation eventually creates multiple losses and points of failure across different techs. Now again, credit card hacks, bank account breaches, things where exchanges get hacked. These areas need to be maintained properly, and when you have a monopoly on data, it's easily corruptible. The other one is the inaccurate verification, which means that even if you do have the system, there's always failures in verification. So again, blockchain is going to kind of come in and play a role in that because of that verification system. Security is a huge problem. Malicious nodes, illegal activity, not sufficient verification. We also have data exchange security issues, which basically causes loss of data at the origin level and also threats to security. We have also trust in collaborative systems. We have transparent issues in equity management, specifically the financial sector, weak community management, false information, weak reputation system or fake news, what you call it, and also charitable donations. So as you can see, there is a huge problem right now with the digital economy, specifically with the infrastructure being built right now using digital assets, in that there are points of failure. And although we want to say that computers are definitely going to help us with that portion, the issue right now is not so much about the infrastructure being built, but it's the issue of verifying that information being valuable. Here is the actual trust system that Ontology is attempting to resolve. Now again, it's a huge undertaking. It's actually one of the more ambitious projects I've seen, because again, when I say the platform of platforms, this is what I'm really talking about. Here are a couple of scenarios. Let's say you have financial services, equity management, data collaboration and exchange. And you, at the first level, you have your people, wealth, things, and organizations. So a company, we're talking about individuals. On the second layer, you have applications that access those. So again, think of your web interfaces, etc. Underneath that, you have your modules, your protocols, your SDKs, your API that pipe in. An example of this being the exchanges, like your crypto exchanges that you have to pipe in API data to get your taxes, for example. And then underneath that, you also have your what called cross-chain and entity mapping and your cross-chain data transfer, and those are going to be working off the Ontology network chains. So think of it as a sub-layer of the protocols. We're talking about deep down tech. Because of that, Ontology is going to support that piece all the way up from the bottom to the ground up. So we're not even talking about just protocol layers, guys. We're talking about a chain system that links together all the protocols and all the APIs on a whole different level. If this doesn't blow your mind, I don't know what will. Okay, so keep that in mind. And everything is going to be built from the foundation. So think of Ontology as the foundation for trust, in which you're going to be able to plug in multiple chains, multiple applications, multiple organizations, all piping in through the network, specifically using different blockchains. And that, my friend, is the reason why I am going all in here, because this is going to be the framework that it's going to enable this trust mechanism to be fixed. Now let's kind of move down to the next part. The first example I want to talk about, and I want to talk about some use cases because, again, there's a lot of technical parts to that, but I want to highlight some of the key parts, and you're always more than welcome to go ahead and take a look at it, because it took me almost 4 or 5 hours just to dissect this white paper up into little pieces and explain it in a fashion that's understandable to people. The first thing is ID verification. Okay, so this is going to be huge. On the internet right now, we have a huge problem with security. When you log into a website, the best identity you have is a password and maybe 2FA. That's about it. But what if I told you that there was another way of dealing with this? So on the left-hand side, I have here a verification system running on the Ontology network. So number one, what do I want to know? What's the experience I've had with, let's say, work travel? What do I own? Let's say property, assets, or debts. Characteristics, DNA, weight, height, that's all on the outside, on the real world assets. So if I walk up to a person, this is who I am. That's my identity. A computer needs to be able to take that identity and needs to be able to make sense of that. Now, it doesn't really make sense to have all this information if a machine cannot learn it, or somebody else on the other end can't verify it. So if I want to verify DNA, I want to verify my height and weight. I just have a number that I can punch in. Anybody can do that. Anybody can falsify that information. Ontology Networks is going to have a multi-verification identity. So it's going to be able to connect all your banks, your companies, your partners, NGSO, your friends, your classmates, all across the board, and cross-check it to verify that identity is not falsified. Now, again, you may ask the question is, why do I need to do that? Well, think about it for a second. Your identity is really driven by a couple of key factors. Number one, your credentials that you have. For example, where'd you go to school? Your college degree, for example. That's warehoused somewhere in a computer system. Your ID that you carry in your pocket, that's actually at the DMV, or it could be at the local government agency. Your passport, for example, that's going to be at the State Department. These are organizations that already hold your data, and they all cannot communicate with each other because you have to go through each and every different one. But what if I told you that if I want to verify your ID and I don't have to falsify just one, I don't falsify one, I have to verify all 15 or 20 pieces of identification in a split of a second. Would that change the way you do business? Absolutely. And so that's why I think that this is going to be an extremely huge part. Now let's move over to the copyright section. The copyright section actually works very similar. So let's say, for example, all the information, images, text, audio, and video is all content that you've created. You have copyright, you have intellectual property that you have to protect, transfer of ownership, and also of transfer of intellectual property. What ends up happening is that that goes to the creator's rights protection, and then there's a cost of trust that needs to be in there. Ontology is going to hook up and provide liquidity for that so that you can actually reduce that transaction cost by verification. I've covered a lot of ICOs in this channel regarding trying to deal with copyrights, and I feel that a lot of them are just trying to patch the problem. Ontology is creating an entire network that's going to bridge both the identity and the copyright together so that you can actually figure out exactly where and who is actually owning the actual property, and also reducing that cost to a very large extent. So I think this is going to be extremely huge, as a lot of these assets right now are beginning to get digitized. All right, let's move on to our next one. Distribution reputation system. This is at the core of really what identity and trust really come down to. Okay, so the first thing is when you apply for a job, you have to submit your social security numbers, you gotta submit your driver's license, you gotta submit all this proof of who you are, and they have to cross-check references, they have to check your credentials, etc., etc. You have to go through like 10 different organizations just to give them the legitimate paperwork. What Ontology is trying to do is what we call the Ont ID. It's very similar to a system where it's going to authorize multiple different channels. It's going to receive the information across different industries, media, community, certification authorities, and it's going to go into the bank, tax office, utilities, and the police, and then it's going to verify it with your companies, and then give it to whoever is requesting it. This is pretty much going to speed up the process. For example, job applications. If you're searching for a job, now you no longer have to wait 2 to 4 weeks for a clearance. Now, if you're applying for a loan, you don't have to submit like stacks and stacks of paperwork that needs to be notarized, that has to be dealt with on a case-by-case basis and verified by people whose sole job is to rubber stamp or to check all those information. It can also be used to check credentials. If you want to get a teaching job at a high university, now you can go ahead and take a look at all those fake degrees that are out there, and you can cross-check those very easily. So as you can see, the reputation of a person in the real world now becomes digitized in such a way that this system now can be verified at multiple different angles. Now again, conspiracy theories aside and tinfoil hats aside, do you think they're going to control that information? The answer is no. They're going to be facilitating the transactions and the verification of these multiple points of entries, and they're not going to be housing any of this information unless told so. So Ontology, again, let me reemphasize what they're going to do. They are bridging the digital world with the real world. Right now, on the digital world, you can do whatever you want. I mean, I've seen people who've literally faked college diplomas and taken those into a job and then say, look, I graduated with a PhD, and nobody really checks because they can't check, or they don't have the resources to go ahead and check to see those credentials are at. What about resumes? When people are writing their resumes and claiming they did it X, Y, and Z, but in reality they didn't. Or when people are telling a loan applicant that they are not actually making income when in reality they are. Think about the financial crisis in 2008 when people were signing in ninja loans, claiming that they actually didn't have income when in reality, when they had income, when in reality they didn't have income. The loan was applied, and then now you had that mortgage mess. So as you can see, there's multiple applications for reputation systems that can verify income, it can verify background checks, can verify police, and make these systems a lot more comprehensive and transparent. Now let's talk about one of my favorite ones, another application. It's called data exchange and distributed equity. Now data exchange is actually even better than this one because what it does is that you decentralize all the databases. So example, let me give you a very clear example. Here in the United States, credit scores are extremely huge. If people have a credit number, a certain number of credit score, it can make the difference between getting living in the poorhouse or living in a very rich neighborhood, because banks are going to verify every single piece of information. Problem is, when they get hacked and people get their credits tarnished, your entire reputation is broken down. And one of the problems is that they're all centralized into these main companies. If you decentralize the database, specifically, let's say for credit scores, you move them into different data buyers. The data buyers move over to the data transactions dApps, and then you move them down to these modules, and the Ontology network is able to plug into these different ones and decentralize those using dApps. Now you begin to discover that data, and you begin to speed up that whole process and get more accurate credit scores that normally wouldn't have it. So on data discovery, it's not going to be on a single entity. It's going to be gathered from multiple different sources so that you can actually get a better assessment of, let's say, for example, credit scores. And as we already know, credit scores have a bunch of ways in which you can go ahead and manipulate that data. And banks who are in the business of lending out to good borrowers need to know where that is. So as an application, as a business, I would pay very good money for this type of verification because it's going to save me millions of dollars if I loan it to the wrong person. The other one is that they actually have to be accepting the data. So on the receiving end, there's people who are going to be receiving that data, and they also need to be verified, and then the user is going to be credited those funds. So that's actually a very interesting one for data exchange. And also for, it could be any sort of data that's being exchanged on these main data areas. All right, moving along to distributed equity. Okay, let's talk a little bit about the equity market specifically. Okay, if you have a truster and you have an investor, and you have multiple investors that want to deal with, let's say, for example, stocks or equity in a company, what happens is that the investor has a trustee, or as an investor, they provide information and risk warnings to these companies, and then we trust that these trustees are going to do what they're doing. Now, what's going to happen here is we're going to have the Ont ID as well. So all these investors and these trustees are going to be verified to make sure that the information that they're providing has been checked carefully and also has been given enough warnings and risk across the board. So as you can see from this chart right here, here's an investor, here's a trustee, the rights are entrusted into this trustee investor, the decision making is brought to the company, and then the company uses the Ont ID feature that eventually is going to cross-check these people, making sure that they're up to date on these specific ones. Now let me give you an example of this. Let's say you're a company, a Fortune 500 company that has a board of investors, and you have designated someone as the trustee or as a point person for all your shareholders. As the investors begin to put money in and begin to trust that that investor is representing their best interests, they're going to be using the Ont ID to verify that these decisions are made carefully. So it's going to be more of a transparent type of decision making as opposed to before, where we had to trust that these individuals with the proper credentials were actually doing. Now you can see how this kind of could get in there, right? These institutions could be media, regulatory agencies, rating agencies, for example, upstream and downstream enterprises. So there is going to be a lot of applications in the financial world where we automatically trust that the individual that we're providing with information is going to do the best in the best interest. But the Ontology network is going to feed into this entire chain right here. So everybody's going to have a look at what each of these individuals are doing. And this could be executed using smart contracts, or they could be executed in some sort of documentation that's going to hold these people accountable. All right, let's talk about some possible applications for Ontology specifically. So basically, it opens up the door for almost anything. When I'm looking at specific projects that have the highest potential for growth, I'm looking at the industries they're going to serve that have the highest potentials for growth. So on the financial sector, trading operations, securities management, wealth management, derivatives trading, collateral management, and supply chain finance. These are huge hits in the finance. And the financial world, as we already learned, in 2008, we had a huge financial crisis that pretty much crippled all world economies. And one of the problems was the lack of trust and confidence in the system. It really wasn't an issue of liquidity. It was an issue of people not trusting the other banks to be able to be solvent. And had we had a system in place, a platform that could have verified these multiple sources of identity and decision making, perhaps maybe that could have been avoided. The other one on micropayments, we have definitely a infrastructure being built and an architecture on Ontology that's going to allow architecture for micropayments using dApps. And again, you can actually bring in existing projects to build upon Ontology. You can have tax filing and collection systems, KYC, AML for verifications. You don't actually have to depend on sole projects to do this now. You can actually bridge together the Ontology network and hook up multiple projects that are already doing this already. You can use insurance, for example, claim filings. If I want to figure out who is who and who is the one who owes money to another organization, insurance is going to be huge. Fraud detection, ratings for TV shows and radio, for any sort of media, digital authentication, and obviously the Internet of Things as well. You can also verify machines as they begin to talk with each other and begin to trust that these machines are doing what they're doing in main factories and automated operations. Consumers, we can use them for pharmaceutical tracking, agricultural food authentication, meaning that supply chain management, kind of like what Onchain, Walton Coin is doing, Wabi is doing. We can basically bring those projects on here and begin to connect those even to a larger extent. On the media side, we're talking about copyright, digital rights management, art authentication. How can we tell whether art products are actually real or not? Who is the original owner? Again, bridging together the real world with the digital world. That, my friends, is huge because, as I mentioned earlier, the world needs to be able to be connected to both sides. You cannot just exist in the digital world because the digital world can be easily manipulated on many different levels. And without a verification system in the real world, the digital world becomes unsustainable, as we can already see. The great example is fake news on the media. How can we verify journalist information is accurate or not? How can we verify that there is going to be ad click fraud on Google? Can you imagine a world where Google can automatically say, you know what, we want to solve this problem with ad click fraud. We're going to use Ontology's platform to begin to cross-check information. All right, so in a nutshell, let's talk about what Ontology is. Ontology is a high-performance blockchain infrastructure. So it is not a dApp. It is not a protocol. It is actually an architecture and a platform that's going to build and bridge together all these chains. It's a public chain infrastructure project. It's a new chain. I like to think Ontology as more of enterprise private solutions that can switch back between public and private. So you have the choice of information that can be flowed into a private sector where information is confidential, but still using the blockchain tech. So isn't that amazing, guys? Where you can actually be able to create these chains that can store and keep information private and at the same time use the public chain. They're going to provide high-performance blockchain using smart contracts and distributed ledgers. So again, it's all part of the NEO ecosystem, and most likely they've already ironed out the problem with scalability using a bunch of different dApps that are available right now. Example, Trinity. They are a framework. So again, let's talk about the differences between framework, protocols, and platforms. So framework is basically the undergrounding design for a lot of the platforms and dApps. So at the very, very fundamental level, they already have an architecture already built that's going to allow a platform to be built upon Ontology's platform. They're going to support public blockchain systems, so everything's going to be transparent, but you can customize the blockchains for different applications. So everybody knows that blockchains are public. You can check on the ledger right now and check all these transactions. These, unfortunately, are not acceptable for enterprise. They want certain things to be private and certain things to be public. As much as I want to believe everything should be transparent, there needs to be a way to customize these to different enterprise business solutions. Ontology also will support collaboration among different chain networks through various protocol groups. So again, think of like 0x, think of Loopring, think of Trinity. You can actually bridge those protocols over and also use APIs. So it is not restricted to its own chain. You can actually bridge together multiple chains together. Originally, it's going to be on the NEO, on the ERC20. It's obviously going to be the relationship between Ontology and NEO is actually very close. They're not competing, and they're more of a synergistic piece. NEO is a public blockchain. Ontology is a private blockchain that could also be public, but they both complement each other in that NEO actually holds the digital assets, while Ontology is going to be used to verify and bridge together the smart economy, which is the digital assets, into the real world. So they actually need each other. They cannot exist without each other. A lot of people think that they're competing. Ontology does not need NEO technically, but NEO will need to NEO is a settlement piece, while Ontology is more of the transactional part. All right, moving along to Ontology. Ontology will create what I call modules. So you can basically create these little mini modules for enterprise, so they don't actually have to create a lot of development for it. That's going to allow them to create different distributed systems. And those are going to be used for the digital identity framework and the data exchange protocol and so on. So think of this example. I'm a company or a very large organization. I don't have the time or the energy or resources to begin to develop my own chain. So what I'm going to do is develop these modules. Ontology is going to support that, while the NEO ecosystem is going to support it technically. So there is going to be a lot of support for both, in the sense that they're going to allow these modules to begin to plug in. It's almost kind of like a plug and play module, as you can think of it. Based on the scenario requirements, Ontology will develop new common modules, and they're going to be using two types of tokens, the ONT and the ONG token model. At first, it's going to be a Net5 token. So I'm sorry, it's not a ERC20. It was a Net5. And it will eventually go on to its mainnet somewhere in second quarter. That's going to release the ONG. The users are going to be able to exchange a Net5 for ONT tokens on the mainnet, which is going to eventually release the ONG. Now, very similar to Neo's model. Pretty much they're going to be using the ONG, which is the gas, and the Ontology is going to be your basically your indivisible unit that's going to be used to do voting rights and sharing and whatnot. So that's going to be an extremely important point that I'm going to emphasize in just a bit. All right, now let's get into the actual token metrics and specifically about what the ONT token is. Okay, so the Ontology is going to follow the exact same model as NEO. In fact, both of them are coming out from the same company, which is called Onchain. And Onchain does not own both of those. Those are basically side projects that came from Onchain. And Onchain is obviously co-founded and as also CEO is Da Hongfei. and also the co-founder founder of Ontology, is also part of the Onchain ecosystem. So these are startup incubators that are coming out of China specifically, and they are definitely following this exact same token structure model, which I think is ingenious, because when I covered NEO last year, this was one of the only tokens that kept a long-term perspective of how this was going to work, and it was successful, and I think it's still going to be continuing a successful model. Number one, ONT tokens are indivisible, which means you cannot split them. They are not fractions of a token. Second thing is ONT holders can vote in major decisions on the network, so they do have a say in how the network's being run. They also are receiving ONG gas, so again, very similar to NEO's gas. Very, very interesting concept, as you already know. They are a utility token that's going to be used for token transactions back and forth into the network. They're going to be used for network storage payments, and they're going to also be used for smart contract execution. Very similar to NEO in terms of what they're doing. The gas, the ONG gas, is going to be created 16% in the first year, very similar to the NEOs, and it increases as it gets to the last one. So 52% in the first 4 years and 80% in the first 12 years. There's going to be a total of 1 billion ONG tokens. So on the first year, it's going to be released 160 million tokens in my first year. So as you know, by just holding the tokens, you're going to get a good chunk of this, which you can eventually fund other operations. All right, let's talk about the Oken token distribution, because there was a lot of confusion regarding this specific thing. Ontology did not host an ICO due to the regulatory constraints in China. And also, I think it was smart of them to go ahead and do a couple of things to lock up. So because of that, the supply has been constrained. So far, there is 22% of your total supply being unlocked, and that's going to be given out for events and rewards. Ontology rewarded people who signed up for the newsletter and also who attended the Neo DevCon. They do a little bit of events like that to give away those tokens. Neo Council owns 10% of that, and they pretty much are used for supporting and doing community feedback. So it's very generous in terms of they're not trying to make money off of this, because they never held that ICO. In fact, they did have they released that, and they didn't have the public sales, so there was really no way to valuing that. On the lock side, however, they did lock up the core team for 4 years at 3.75%, and also institutional partners and real businesses for 2 years in 4 batches. So this is very interesting. Normally, when you see a project like this, they normally allow the core team to unlock and dump their coins to fund themselves. But here, it's a little different, because what they're doing instead is that they're locking up their tokens so that it incentivizes them to continue working on the project. And I commend them for doing that, because they can easily have unloaded all their tokens at the beginning and then ran away with the money. But instead, they're using it to give out to the community and to garner interest for it. So I think that's a very noble. And by the way, they've locked up 50% of their total market supply, their total supply coins as well. And they've been very transparent of how they're unloading those. Now, in regards to the community, again, 12%, giving back to the community is important. They did give those out to the NEO holders, which is awesome. And they're going to continue doing those throughout the year. So hopefully we have some good community events. Institutional partners, which is 28% of the 50% that's coming out, but 6% of the total float. So as you can see from here, this number in parentheses is the total percentage of the entire circulating supply. This is what they've recently just unlocked out. So obviously this is a lot higher, because they're keeping half of the entire tokens, and they are releasing the other half, which was institutional partners as well. So a lot of the selling that's happening right now is most likely the institutional partners perhaps maybe trying to raise some money, or some of the community members who receive their tokens, not from their core team, which I think is very important, because that puts them at work and attempting to continue with that project. Let me move on to the NEO Council, again 10%, the NEO ecosystem 25%, technical community 10% rewards, and core team. So as you can see, it's a pretty even split. They know that they can't quite, give everybody all the tokens, because then people are going to start looking at it differently. All right, let's talk about the token metrics real quick. This is actually very important. There was no public sale or ICO for phase 1. They did a multi-phase token reward plan. They did a newsletter and Neo DevCon. So they were very clear about where the supply from that came from. They also ran some competitions on major exchanges like Huobi and also Binance to kind of release some of those as part of their reward plan, which is fine, I think, in my opinion. Phase 2, there has been no details. The launch of the Ontology mainnet It's going to be sometime in June. They're also going to be, you also will need it to participate in the Ontology network for phase 2. So which means that anybody who got airdropped those tokens can now basically sell them during June. So, obviously there's going to be a little bit of a supply of an inflation rate, but the main point is that you will be incentivized to hold them onto the mainnet. So there is going to be a counter to that one. The Ontology holders hold the rest of the tokens. So the Ontology team has 50% of their total 1 billion supply count, which puts it, and they're going to be generating gas in June, and that represents 47% of all tokens. So pretty much the supply is actually pretty low, even though it's a 1 billion coin count. All right, let's talk about the token distribution and specifically more information about this, because this is actually one of the big contenders as far as one of the problems and criticisms people have about the network is that there's way too many tokens compared to NEO. NEO only has 100 million max, this one has 1 billion. 53% are in circulation, 53.75%. The token price approximately at when it first came out was 2 cents, so there's automatically a 7x return already on them. So obviously there could be a little bit of pricing pressure. Anytime a coin goes up 7.5 or 10x, usually it ends up pulling back quite a bit. But I do feel because they had a very irregular, unorthodox token distribution system, this actually doesn't really apply. So I do think that this 7x return is going to be muted compared to other ICOs that went public on their main sale. The community was 12%, and again, this is just a recap of kind of what I had. The circulating supply right now is 537 million 500 tokens. If you take the 53% that's coming out and if you add up all of these, it comes out to about 500,000. If you subtract the locked tokens that have not been released yet, that gives you an estimated amount of 306 million tokens that are in circulation. On CoinMarketCap, they have about 241, so there's a little bit of a discrepancy here because some of these have been locked in 4 batches. So obviously this institutional partners have released some of their tokens, and then the core team has already released some. So that's why this one is probably a little bit lower, but it should fall between 241 and 306, or about a 60 million price gap. But I'm gonna go ahead and assume it's a 306 just because I'd rather be on the high side than on the low side. So with that, that puts the market cap a little bit higher than 349, probably somewhere in the 4-ish range, or high 4s, low 5 range. Okay, the valuation is really straightforward, guys. There's no partnerships, nothing has been announced. It's been pretty hush-hush as far as everything. With everything I told you right now about Ontology, there is a plethora of news that could potentially come out going into the mainnet. The second thing is they're tightening up with government. If you check my interview that I did with them, they were talking about passports, how digitizing passports is going to be huge. Any sort of government announcement, it's gonna moon this coin, because this coin is basically there hasn't been any hype on it. In fact, the only hype was just the fact that it was part of Onchain. That's about it. There is existing partnerships in the works, as I was talking about before. It's a platform of all platforms. So I wouldn't be surprised if Loopring, ICX, or any of these other platforms hop on board and decide to use Ontology's network. The second thing is there's huge lockup periods for a lot of the core teams. So the supply is always going to be constrained on some level. The 1 billion token metric that you see out there, that's not accurate. Okay, so it's actually the circulating supply. So if you go ahead and do the valuation a little bit, you're looking at about 340 million tokens, which puts it a little bit over NEO, but still under ICX's target range, which puts the market cap at extremely undervalued relative to, for example, ICX, which is already at $1 billion and change. So you're looking at the minimum, potentially a 3x, 4x on this one, just to keep at the same level as some of the other platforms that don't have half the things this one does. The mainnet, I think the mainnet release is going to push demand through the roof, as people are going to hoard the coins for both transactional purposes and also for the ONG gas generation event. Now, moving along to my estimated valuation model for this. Now, again, this is not financial advice. You do your own homework. This is what I kind of came up with and why I'm going to go all in here. It's because if you take a look at NEO's market cap, it's 4.4 billion, dollars. $68. When I covered NEO, it was roughly around this range where Ontology was at, around 300, sub 400 market cap. NEO has 65 million in circulation, obviously a lot lower than the 100 million. But even if you do the math here a little bit, Ontology's circulation is around 240 million, 350, and you're only with a $349 million market cap. Now, let me give you hypothetical numbers here. If Neo's 4.4 billion, Ontology is 349, and Neo's price is 68, while Ontology is $1.42. On the projected Ontology's price, I'm looking at, let's assume it gets down to Neo's $4 billion market cap, because I do think that these two are actually head on. I think a lot of people think that Ontology should be worth like 10% of Neo or less. I don't personally think that. And the reason was very simple, is that Ontology is going to work hand in hand. They're equals in my eyes. Now, again, I could be completely wrong, but based on what I told you, all the application it has, this project has the potential to rival Neo or potentially exceed it. Now, again, Neo is going to be the digital assets part where a lot of the value is going to be held because people are going to be holding the assets on. Ontology is going to be like the conduit in. Think of like Ripple. Very similar to that piece. And I know people don't like Ripple, so I'm not going to talk about it too much. It's not the same in the sense that they're going to be competing, and it's also not in the same league. This is a whole different architecture and a very different type of system that we haven't seen before. And that's what attracted me to AntShares last year when I was covering AntShares, because it was a very different type of method and project that nobody else was doing. And Ontology is breaking into this consolidation of these platforms. So I think that 4.4 billion, and if Neo drops, obviously Ontology is going to drop. So I think 4.4 billion is probably between 1 and 4 is where I'm looking at. Let's assume that's the case. That would put Ontology's projected price at about $17.40, which put a 12x multiplier plus the ONG gas that's being generated. So if you take a look at Neo's gas price and Ontology's price, that would put ONG's gas at about $5.56, which means when mainnet when the mainnet's being released, right? And assuming we do get the price appreciation of $17 at its peak, and again, this could be higher as long as if Neo keeps on shooting up, then Ontology is going to continue kind of following along. The ONG tokens that gets generated right now is going to be worth approximately $5, which is going to be pretty good considering that right now it's only $1.45. So same idea as Neo's situation with gas. The way I'm going to be playing this out here is I'm going to be holding both. Obviously, I'm going to be holding a lot more Ontology because it's definitely undervalued in my eyes. And I'm also going to be generating a lot of gas once the ONG model kicks in, which hopefully will drive the price up. Now, the only drawback right now is that this is your second person coming up, right? Second project coming out. So obviously Neo is still my baby. But the fact of the matter is, if you take a look at the valuation, it doesn't even come close. I don't know why the market's valuing it at 10%. I personally think this is a mistake. But I think part of the reason why it's because most people don't understand the tech. And the second thing is they haven't done a lot of marketing at all on this one. Very similar to AntShares. And so once that marketing kicks in, and once people begin to understand the different applications and where they're going, that's when the market will begin to fully value Ontology for what it's supposed to be. And once it gets there, it will easily go into the $3 billion club, which puts it at the minimum of $5 coin. So you're looking at a 3 or 4x. Now this is actually a slow mover. It's not one of those like coins that's just going to pop real fast and drop. This is a very slow moving coin because, again, it takes a while for people to understand what they're doing. All right, guys. Well, I hope you enjoyed my video for Ontology. I am super excited about this. Again, this is my own research, and I do hope that you find it extremely useful. This is going to be my second chance of getting another Neo. And I hope I'm right. And if I'm wrong, then, there's $349 million coin. I mean, come on. What if they can achieve even just 10 or 20% of what I just said right now in this presentation? It will have been worth it. It will be even worth more than 349. And I do think that if this market cracks into the $1 trillion, $2 trillion mark for cryptocurrencies, and Neo gets back into the $8-9 billion market cap coin, this coin's going to fly. Again, these are my own models. These are my own predictions, my own opinion, and my own financial advice. So have a great day. Go Ontology, and let's do it again. CryptoBud out. Have a great day.